Abhishek Agarwal joins us. He's the founder and managing partner at Rockstud Capital. Mr. Agarwal, good afternoon and thank you so much for taking the time out for this discussion. First up, your thoughts on the overall markets. We saw that remarkable rally, a 9-day rally, but then today again we've hit that speed bump because of the IT earnings and the downgrades right there. What is your own sense of where the market's headed?
Hi, Sakshi. Thank you so much for having me. See, markets are going to face some sort of headwinds. Eventually, the fact remains that the global environment is still recovering with a lot of things which has happened in the past, especially few banks which was sold overnight and change hands. You have inflation issues across matured economies. So these headwinds are going to get reflected to even our companies. No matter what IT is dependent on these developed nations like US and Europe. And if things are not happening great at their level, certainly the margin pressure is going to happen. And that's what we are seeing, the reactions. So I think despite our Indian story looking strong, but at the same time, from the results point of view, we will see some sort of these disappointments. Maybe sectorial rotation is something we might see going forward.
Okay, but what about the FMCG basket, especially led by ITC, the kind of move that we've been seeing. In fact, ITC has been outperformer in 2022 and in 2023 again on a year-to-date basis. The stock is up 20% when the index is down about 3%. How do you really look at this upward move? What is fueling the rally on ITC, and do you see this rally sustaining as well?
See, when we look at FMCG, and in this example, we are talking about ITC, this is what is the difference between a global versus local. So ITC is more of a consumption story for the India. Again, their continuous improvement, if you have to look at from their business standpoint of view, that is away from cigarettes, but largely the other pieces in FMCG and hotel business. I think so that sector, that segment has started doing well. And now being a leader was always there, but then the leader has to perform. And that performance lag was there for quite some time, which the management has fixed over a few quarters. So I would see that this company is going to continue delivering better performances, and that's a reflection in the stock price. I think that when somebody is moving away from IT, and as I said, that the sector allocation changes, one if goes in FMCG, naturally they would pick up the leader, and in this case, ITC.
Yeah, and when interestingly for all the viewers, I wanted to point out as well, it would be very interesting to see how are the other FMCG majors really placed at this point in time. Nestle is also up by 4% today. The stock is trading at a 20,249. Look at a Britannia, for example, 4,335. That's the kind of level at which that stock is also trading at. Even Godrej Consumer Products is about 975 rupees or so right now. HUL, for example, 2545 rupees. That's the kind of level that it is trading at. Compared to all of these, ITC is still trading at 400 rupees. Do you really see that the ITC would still have a lot of scope to catch up with the other FMCG majors?
Well, I truly believe that the catch up should happen. The reason why it is a laggard versus all these names which you have taken is because of the pure play, right? We still need to understand that ITC is a conglomerate. And you have various business in that, including cigarette, where the ESG focus funds might not be, looking keen on them. But fact remains that, as I said, that it's equivalently the other businesses are large, and therefore, when the valuation play would come, certainly that adjustment is going to come going forward.
Yeah, absolutely understand that as well. Apart from this, how are you also looking at these banking and financial majors? There's a sudden pickup today in the PSU banks again once more. We've seen already a sharp rally for a momentum period as well in the PSU banking space. Things are turning in favor right after the COVID period underperformance. Banks, financial services are again coming back. Most of the analysts do have a consensus buy on them on the expectations of the Q4 update, business update, and the kind of earnings that they can post as well. Your own thoughts on how are you really approaching the banking and the financial space right now?
Oh, well, I will be bullish on this because, India fairly being a large country and still the financial sector is one of the heavy weighted sector itself in the Nifty and others. I think that is going to play for a country which has to go from $3 trillion to $10 trillion equivalent. The impact has to grow in terms of the sector. So I think the financial is, of course, going to be a long-term play, and one should always have some sort of allocation in this space. Coming back on specifics, I think so. PSU banks historically was a laggard again in terms of valuation when you have to compare from privates, and NPA issues, not catching up with technology, inefficiencies. I think so. All those things are now coming. The gap is getting narrower. So I
Okay.
feel that is the one thing where the numbers are now coming consistently better and better quarter by quarter. No fresh surprises are coming in the sector like the way how we used to see the inconsistency when the NPA delivery was coming. So I think all these factors are coming play. I think one has to see that currently market is really decently valued,
Hmm.
and if one has to really take a now bet, I think PSU banks should be looked at this point of time for the
Okay.
simple reason that there is a growth. There is a now story which can be seen consistency in terms of their performance, and the valuation gap should now get narrowed down eventually, which is at this point of time is significantly higher, and that is where the value can be made in terms of money.
Okay. What is your own sense? We are amid these earnings season as well. In this earnings, which is the sector that you believe may come out with exceptional earnings and, may outperform the earnings season? And where do you believe that there could be underperformance and therefore investors should avoid that sector for now at least?
I think from the performance point of view, again, we are, just at the beginning of this result season, so it's quite difficult to do any kind of prediction. But I think auto sector should do well because fact remains that there is a huge queue up in terms of the demand which is there, and then the supply issue constraint is consistently hitting it. I think so that if you look at any automaker right now on the street, and you would say that okay, what is your waiting time? I think so nothing less than 3 to 6 months, right? So therefore, there is a strong demand there, and that should reflect in the numbers. I think auto sector should be, auto sector itself as a main four-wheeler, two-wheeler, plus its ancillary companies, because finally it has to dwell down till the bottom of the pyramid, and that is what something I think, this quarter should give them good numbers. From the bearish standpoint of view, I think so. We have already got this, early sign from the IT sector, and there are two-fold problem. One is, of course, in terms of the future forecast number and margin, and second biggest problem is leadership. Both TCS and Infosys is showing something which we probably have never expected. That at the top level the leadership is changing, or they're just leaving in a very short span. I think so that because of that the sector might see further fallouts going forward.
Okay, as understood right there. What about the e-commerce space? Is that a space that you're also tracking? Some of these newly listed new age tech companies. Now they've had a rough run over the last 6-8 months or so as well. Of course, after that, kind of a euphoric listing that we saw and the kind of subscriptions to the IPOs, these companies have not been able to really give a lot of positive returns to the investors who really believed in these companies in the initial run right here. Your own thoughts, have things started to change from Q3 onwards? We did see some of the signs of companies focusing on profitability, at least making an effort towards that. Have you been able to track one or two companies which you would be now positive on?
So, Sakshi, the market is full of learning, and the learning is not limited to investors, but also to these new companies, right?
Yeah.
There is a certain way how you have to run your businesses after you get listed. There is a certain way you need to be accountable on in terms of your performance. And I think so all that is a learning for all these companies, which now you
Yeah.
will be seeing in terms of their, commentary now onwards, and even the numbers. For example, if you look at Zomato, even if you look at Paytm,
Yeah.
Policy Bazaar, and you just look at the commentary at the time of the listing and versus today, and there is a huge difference, right?
Yeah.
The valuation was, of course, at that point of time, it was euphoria in the market. They managed to get listed at a price which was, of course, not many could have justified. But all done and dusted today, I feel that these companies do hold value. Okay, it's not that the story was not there. I think so. The mismatch of expectation comes from a certain set of investors who might like to pick up a certain stock in a certain way versus these sort of companies which require a gestation period of 5 to 10 years, even after getting listed. For example, if you look at Amazon in US, I mean, they never built a company overnight. They were loss-making company when they went to IPO, and eventually it took 4 years to them before they turned out to be profitable.
That's
So
true.
this is a time lag which happens. These are new companies which have just in existence for 10, 12 years, thanks to the internet penetration, thanks to the exponential market, which was, ready to get captured. All that happened all of a sudden for them. And in that, of course, you then in the interest of becoming bigger, you compromise a lot of the other sides. And I think so now that course correction is happening. I am positive on these companies. I think there is a future. The pricing here is very lucrative because the correction has been steep. But again, not meant for retail investors. This is meant for those who can see India growing multiple folds from here and
Yeah.
understand that if you do that in the next 5 to 10 years, these companies would be really valued much better than what they are valued today.
Sure. Understood that. In the end, if you could help us with any of the top 3 or 4 stocks that you have on your radar amid the earnings season, where you look for promising returns, where investors can keep their on their radar as well, as far as the short to medium term or a medium to long term opportunities, concerned.
Uh, Again, being SEBI regulated fund, talking specific names might not be the best way of putting it across, but still I like to share some names and at the discretion saying that these names again should be further validated by the people who are buying these stocks.
Sure.
I personally believe that in the banking sector, Canara Bank is one prominent name. I feel is well valued to be bought. Tata Motors, again in auto stack, I feel that is another pick, which is a story to play on. So these are the couple of names because certain sectors I said that it's my preferred sector in my recommendation. I'd consider these two stocks in that same domain. And if one is looking in a startup place, I think so. Paytm, I think so. The bad days are gone, and they definitely have built a business where they can really reap
Sure.
results. So these are the three names I would like to consider as an investment today.
All right, Canara Bank, Tata Motors, and Paytm is something that you are looking at. Many thanks, Mr. Agarwal, for being with us and sharing with us all these insights about the earnings as well as market outlook going forward from here.